value line is doing this, yeah? If the relative value is doing that, and for argument's sake, this is I'll do some prices on this chart. We'll do some prices. We'll start at 20, 19, 18, 17, 16, 15, 14, 13, 12, oopsies, 11, 10, 9, okay? So in the market maker's game, if you saw value doing that, and this is the current price, give me your bid and give me your offer. As a market maker, you've got to do two-way money. Give me your bid and give me your offer. Roderick, specifically for you, give me your bid and give me your offer as a market maker. Yep. Well, give me the numbers, because on the charts, you're going to have to come up with a price. Okay, so if we're going to offer it, you'd probably offer 16s or 15s, wouldn't you? If you're going to offer that chart, you're probably going to offer 15s or 16s, yeah? If you're going to bid for it, you're going to bid down here, perhaps, aren't you? You're going to say, well, I'm going to bid 11s. For argument's sake, I mean, there's no answer to the question. It's just what you're going to bid for it. So if you look at that chart, if you know that you're going to bid 11s and you're going to offer 15s and 16s, well, what should you be doing as a trader? What should you be doing as an actual trader? Seems dead obvious, right? You should be simply selling down into that process, shouldn't you? So obviously you're looking at that and saying, well, I'm not going to bid until we start dropping. So I don't really want to trade this. And what's going to happen to the candle is generally, as a rule, you get a candle that then looks like that, don't you? As a rule, the candle forms, and that's what happens. So we can actually start using that knowledge. So if I said to you, would you bid 15s and offer 19s? Would you have answered yes? Of course you wouldn't, because you're going to get annihilated as a market maker, right? So the knowledge of what you would bid and offer as a market maker tells you what you should be doing as a prop, as a local on the floor. Knowing what the trade is going to be because of what we see on value, but it's not just about the value, of course. We could also look at what the market maker is actually doing. And if we look at what the market maker is actually doing, we would obviously be able to look at, for example, liquidity on the limit order book. So if the limit order book was stacked on the offer, then that gives us even more confidence that the market maker is doing exactly what we think the market maker should be doing, which further enhances the ability for you to get short selling into that candle. If the market maker was doing something completely and they were stacking the bid, you'd have to look at it and say, I don't actually know. Why would the market maker stack this bid? I don't get it. I don't understand. Perhaps it's a spoof. Perhaps they're stacking the bid because there's no sellers. And that brings in the delta line, doesn't it? So we can see whether the delta line is massively heavily short. And if the delta line's massively heavily short, does that change your opinion? Sure, because the price might have to go up a little bit to sweep some of those sellers off. Because if the delta's heavily short in here, then of course the market maker doesn't want to give them that open profit, does it? So we start to recognize this, don't we? We start to recognize that the relative value in this equation becomes important, but also the liquidity order book becomes important. But we also then recognize that the delta becomes important, because the best delta we could have on this would be buy-side deltas, wouldn't it? That would be the best delta narrative. Because obviously that means the buyers are trapped. So the press becomes even more appealing at that stage. Because obviously if this candle has a massive sell-side delta, they might have to take the price up. They might have to take the price up because that's maybe what they're pumping. So we start to develop our knowledge of how to trade this as a local. It's not about one aspect and one aspect only, is it? It's about reading the tape properly and putting the tape into the context of what else is happening. And inside that context, then making the decision about how to deal it, making the decision about how to come back into this as a bit of business. And that's what we're going to be focused on in classroom this afternoon. Okay, guys, it's just after 1 o'clock over here. Oil's been a bit of fun. We obviously talked about selling oil from $70 the other day. It's traded a low print. It's bounced off the low print. We managed to get a buy trade out of it. We managed to get a swing into the trade. Made some nice money. Currently short the S&P and doing very well. Thank you very much. Doing very well indeed. This is still into last night's RGL, of course, sell side RGL. And we've obviously had to go in the face of the positive upside from the London session. We turned a little bit blue from the London Open, but we were still inside the S&P red. And bearing in mind that we've got a bearish, strong bearish skew. Strong bearish skew. It's not the strongest. It's not a 4-pointer. It's not like a given that we're got to be sell side. But with the shape of the dollar today, I like the idea of selling the S&P. Does everybody agree with that? Does the dollar give us a few ideas about being short the S&P? I think you probably would agree with me that that's very clearly the case today. So when we look at the S&P, here's the dollar in the background. This is obviously our ABCs, okay? So with the ABCs very bearish, of course, the ABCs have been very bearish since the top edge was put in. So here's the RGL. Okay, so there's the RGL of today's trade. So last night's RGL, 18s, 19s, yeah, that's what we shouted last night. Sell side business, sell short, and then we've got a nice half-back trade area here that we've been basically dealing with all morning. And obviously dealing into that short sell. Again, the pound is still in our favor. The dollar is still very much in our favor. So I wanted to sell the blue pullback candles, which we managed to sell into, the blue pullback candles, the big volumes. And selling short, selling short, selling short. And we've had two very, very big exit price opportunities. There and there. And all we've done is we've been selling the blue uprights and we've been bagging profits on the red down ticks. Crazy way to make a living. Serious crazy way to make a living. And we can recognize, of course, the low volume nodes. Where's the low volume node? Well, of course, this is the low volume node here. And that's obviously the price that we started to work back into that short sell again. When does a short sell turn into a possible buy trade? Well, of course, it's the thick red line that stops at that point there, doesn't it? So the thick red line there is where the RGL turns bullish. So it doesn't turn bullish until we go bid above 19s, right? That's the RGL. That's the US RGL. Well, that's what the sweep is. That's what the skew is based on, is the US RGL, isn't it? It's the US close. So based on the US close, I still prefer to be short below this area. Is everybody happy with that? I still prefer to be short below this area. And with the dollar risk currencies on an offer, so the risk currencies are all on offer, high betas are on an offer, I would rather be short selling the equity markets. And short selling the equity markets, is there any better place to short sell than high volume leans? Not really. We know that high volume leans are low volume prices and low volume nodes. And because they're low volume nodes, they are rejection price areas. And based on rejection price areas, you'll see all of those rejection price areas simply by following these low volume nodes, which are high volume candles. And we started to draw in some lines against each of these prices. We started to recognize how it was probably going to develop. And it doesn't mean that we dismiss the fact that there are buyers at higher prices. On the contrary, the demand that came in through that phase was pretty much straight line. I mean, you pretty much can cover the demand there through this box here, through this box here, and through this box here. So we already had a line that would define exactly where all our trades were going to be. And as we go through where all the trades are going to be, that's all I've done is sell those prices, simply from that simple knowledge. And obviously, when we sell into those prices, the sell-off was pretty good. I mean, we went 16s down to 8s for an 8-point profit, $400, pretty good. Are we talking about the ABCs, Michelle? The ABCs are made up of the 6A, the 6B, and the 6C. So the Canadian, the Aussie, and the pound, divided by the J's and the E's. Divided by the J's times the E's. In other words, the Aussie, the CAD, and the pound divided, so all the high beta currencies divided by the low beta currencies, the euro and the Japanese yen, and the low beta currencies, 6E, 6J, and you just multiply them out. And that gives us a currency risk line in the background. So effectively, we're neutralizing the dollar's impact. We're neutralizing the dollar's impact. We're selling the low volume nodes on blue up candles because we're below the RGL and we have that bearish skew, Miguel. Remember, it's not just because we're below the RGL, but we had that bearish skew in the background as well. So the dealers obviously have an idea that they're going to be selling the US session. Well, would it not be good for me to be short into the US session to see if the dealers are right? The dealers are nearly always right, to some degree or another. So I'd like to be still short coming into that US session. So that's what I'm working on. Now, if the value changed, if the narrative changed, well, of course, I would change my mind about that storyline, wouldn't I? But the value hasn't changed, has it? It hasn't once changed, basically, since the London Open. It looked like it was changing here. I mean, that looks as if that's a buy trade opportunity at the London Open, doesn't it? Right into the London Open itself. It looks like this is a very strong buyable opportunity here, especially on the retest at the London Open itself. So that looked like a really good buy opportunity there, but it quickly swept away from the highs. And as soon as it swept away from the highs at this LVN here, I know that an LVN into an LVN like that, so there's an LVN there because of the price, but there's an LVN there because of the initial balance. An LVN into an LVN is a sweep, right? So we get a sweep there, we get a sweep there, and all we do is we start working the short sell for that London Open sell short position, and that was brilliant. That was a brilliant trade outcome for us. Crazy, 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 crazy. Still buy side bonds, by the way, guys. It was a nice wee dip there for you to buy back into it and take a little swingaroo at it. The idea was pretty straightforward. The delta was pretty straightforward. Did you see the delta? Wow, great trade. But I said I wouldn't talk about bonds since nobody was trading bonds. But it was for me, it was a wee buy trade back off the 31s and made some easy money on the ZB contract. Nice and easy, nice and squeezy, guys. Nice and squeezy. We love it. We love it. Brilliant trade. Lovely outcome. Anyway, welcome, guys. I'm going to grab a little bit of lunch, but before that, we'll just get through what we've seen and what we have coming up for the afternoon session. Now, it's all central bankers this afternoon, whippy-do. So, you know, they're all scheduled speakers. We've got Lagarde, we've got Bailey, Powell, and Lagarde again later on this evening, 4 o'clock London time, in fact, and all speaking at a ECB conference on central banks. Brilliant, great fun. But these can all cause market moves. These can all cause market moves. So we're kind of left on a little bit of tenterhooks, especially as bond traders. We're left on a little bit of a tenterhook about being too exposed when these idiots starts talking. You know, and these guys can obviously cause a change to the entire narrative in the background. It's unlikely, but they could still do it. At the moment, for me, it's been buy-side bonds from last night. We told you about buying the break of the low box, which turned out to be a perfect example of another perfect box trade, but on the opposite side to what everybody else would teach. And we made a lot of money on that buy trade, and we've been kind of trying to work our way back into that storyline ever since. Successful on the last couple of occasions, but we've still been working hard to get the right trade on. It's a buy-side only trade. You'll see that from my tweet narrative. So anybody that's not on it, you obviously can't read. And there's my tweet narrative there. We were obviously trying to work into the buy. We thought this market had a lot of upside in it. And that's exactly the narrative we've been working into. And we're still working into for that upside to play out. So we're playing this on the long side. You can see from a bond perspective, that's what we tweeted last night as well. You'll see from last night, we were talking about buying bottom bracket breaks. Makes sense. Buying bottom bracket breaks makes sense with the bids developing on a knob spread. We got a bottom bracket break at 7 o'clock this morning. And since then, it's basically been buy side, pretty much buy side only for me on bonds. So that's been my bond storyline today. Anyway, looking at the numbers, Italian CPI numbers came in disappointing at 0. They were expecting, and disappointing, obviously, for CPI can be positive, of course. 0 against a 0.3 forecast. And that's pretty much all we've seen. The Australian CPI actually came in disappointing as well, which is good news. Came in at 5.6% against a forecast of 6.1. So inflation pouring back down to not exactly normal levels, but certainly more normal levels as these meaty 1 year ago levels all start dropping back out, then of course this inflation is going to drop back down again. We can all see that. Simply look at your oil charts from a year ago and then look at where oil is just now and see if the oil price is dropping. That's going to give you a fair idea about inflation measures. Look at natural gas prices and do the same exercise. Okay, so this afternoon, as I said, there's no real data of interest. The goods numbers coming out from the US, not of interest. Wholesale inventories, not of interest. Really, the only thing of interest is going to be the speakers. And of course, it's the Baron's Ball. So I know Kim's had her hair getting done. And we all know what happens when Kim gets her hair done. It's not a magic wand, it's a pair of scissors. Okay, so we know that that's going to take a while. And obviously the Baron's Ball at 3:30. Make sure you get your dance card marked up. Kim will be looking for that one. And we're off and running. 3:30 today, the Oil Baron's Ball. Forecast draw of 1.4. Forecast draw of 1.4. Anyway, I'm going to grab some lunch. I'll be back in 10. And then we'll get started for the afternoon session 1.